Hello, everyone. Welcome to Feedstuffs 365. I'm Sarah Muirhead. Joining us today to talk about what's happening in the beef sector is Trey Freeman with Ever.Ag. Welcome, Trey. Great to have you
Good,
back with us today.
good to be here again, Sarah.
For those of you that are joining us online, we appreciate your time and tuning in, and we would really like you to post any questions you have there in the chat, and we'll get those over to Trey as we move through our program here today. If you're joining us from social media, post your questions directly in those channels, and we will get those here as well. So, Trey, lots going on in the cattle market. I know we've got some prices, and they just keep going up, up, up. What's going on? What is fueling this price rise?
That higher and higher we go, and in fact, just an hour or two ago, maybe a cash developed today in the north for this week at 320 dressed. We trade about 315 last week, so on a dress basis, that's $5 more. Bids at 203 surfaced live in the north. They're being passed on. No development in the south yet this week. But a lot of the trade has expectations that the South could see up to $2 this week. Last week we hit a new record in the 5-area weekly fed steer price at 198.93. Really, what we're seeing is Packers had light purchase volume for most of December. Had them paying up to secure inventory to meet those slaughter schedules last week. Still short coming into this week. The bids, the little trade we've seen so far is reflecting that. So that record 5-area that is expected to be surpassed this week. Moving on to the futures market, April through December live cattle made new contract highs today. March through November feeders made new contract highs today as well. And so on the future side, what we're seeing a lot is, of course, cash is leading the way. What else is going on? Managed money and live cattle. They're net long over 131,000 contracts. That's about 4,000 less than a couple of weeks ago. But I wouldn't be surprised for tomorrow's report to show more length being added. They've only breached 140,000 contracts once, and that was back in early 2019, where they actually hit 155,000 at one point. Net long position. Feeder cattle, we're seeing the same thing. Net long managed money is 20,300 contracts. That's the largest since 2012. And open interest has been raging recently. In fact, for live cattle, open interest it's 370,000 as of today. It got up to 375 yesterday before that little sell-off we had. But they added nearly 30,000, or open interest increased nearly 30,000 contracts in just 5 days' time.
So what are the implications then of this managed money being so influential in the market right now?
What we've seen in the past 15 months, we have seen, for instance, in feeders, 3 moves, corrections of $20 to $30. And those corrections only lasted, 2, 3, 4 months. And so that is the effect of managed money. They're quick to get in. They really accelerate this market higher. With that comes the elevated risk of volatility. And so the higher this open interest goes, the higher the longer the managed money net position is, the more risk it is that they bail. And when they bail, they tend to bail quick. So it's just an added factor into it that really can bring a big surprise very fast should they decide to exit.
And it's good to know that it's there because, like you say, there'll be an exit at some point, and it could be pretty dramatic.
It could, but it provides opportunities sometimes to the upside as well. So we got to remember that.
Okay. What about the cash and boxed beef market? What's your outlook there?
Yeah, well, looking at boxed beef, Packers' only mechanism right now to stop margins from decaying, it's to cut the production, help prop those boxed beef prices. Cattle feeders, they still hold the leverage though. They have incentive to feed cattle longer. This is keeping carcass weights astronomically high, which led to 2024 fed beef production larger than that of 2023, despite about the same number of fed cattle being slaughtered. But overall, it's been a net win for the cattle feeder, and they retain that leverage still. As far as box beef, Choice printed 330 in this morning's report. Select printed 309. Both of those were up another couple bucks from yesterday afternoon's report. Box beef has just outperformed expectations. Yeah, it's being propped up by production cuts, but what merits attention is the strength in end meats, such as the chuck and the round. They're leading the way higher, while the rib primal, it's in sharp decline. The switch in demand to ends from middles, it is seasonal, but that strength in ends is certainly exceptional right now. This was the case for most of 2024, though, where the chuck averaged 7% more than in 2023 and the round 10% more. All the while the rib averaged slightly less, about 1% less. But altogether, Choice averaged $9 more, or 3% more in 2024 than 2023. So what this saying is, on one hand, it signals Americans are potentially trading down into more affordable roast, strip steaks, ground beef instead of premium ribs and loins. But at some point, there becomes a limit to what the consumer is going to spend. However, this also implies that the consumer still wants beef and is instead turning to end meats to satisfy their desire for beef. So they're not leaving the beef aisle. In fact,
go
go ahead.
ahead. I would say there comes a point too when they don't want the lower end, right? They want to go back for that good steak or those good ribs too.
And that's what we saw in the holiday period here. Thanksgiving, Christmas, the rib had underperformed really in 2024 leading up to that. And then holiday season came around. And so when the holidays do come around, yeah, they're still buying that. But overall, looking at throughout the year, 30,000 foot perspective, demand for those end cuts is really gone up. So, but retail demand on the retail side over the holiday period, scanner data says that beef volume sales increased by more than 5% year over year from November 1 through year end, easily surpassing pork and chicken sales growth. For all of 2024, volume sales by that same measure gained more than 3% versus 2023, even with prices up an average of 5%. So demand looks strong. Consumers keep buying beef, and it's all over the scale as far as end meats, seeing some move from those higher price cuts to the end, but they're still buying beef. So outlook remains good. That's a lot of the strength here recently is we can't do it without demand, and it has performed extremely well over these last couple months.
What about fed beef production and slaughter? How's that trending overall?
And steer weights, they're last reported at 953 pounds. In 2024, they averaged 930 pounds, or 23 pounds more compared to 2023's average. Heifers, same thing, last reported at 871 pounds. They averaged 847 pounds in 2024, or 19 pounds more than in 2023. I'd look for that to continue. We got low feed prices. Cattle feeders hold the leverage. Packers need inventory, and their urgency to secure that inventory outweighs any economic incentive that the cattle feeder has to let go of those cattle, a little earlier. They know the Packers need it, and so they're holding out. And so this is going to keep dressed weights elevated for a while. So I'd continue to expect beef production, especially fed beef production, to make up that larger percentage, just like we have seen over the last year, more so than the non-fed and the total beef production.
Exports, imports, possible tariffs. What's going on there?
Beef exports for the month of November were released this week, showing a 10% increase from November of 2023. Year to date, that's just a fraction lower for exports. Exports to South Korea had a big month. They're up 22%. China, Hong Kong up almost 7%. So exports to Asia remain firm. Moving forward, the biggest threat is some sort of retaliation from potential tariffs with this new administration. So that is one thing to keep an eye out for. The strength in the U.S. dollar, I mean, we're trading up there at 108, 109. So we continue to trend higher. Imports through November still well in excess compared to that of 2023, up 24% year to date. And importers aren't wasting any time pulling in product from Brazil as the duty-free quota renews for the year. And as of January 6th, 73% of the quota had been filled there.
What about the what was I going to say? No, we had Jake visit. What about immigration and any of those factors? Are we going to start to see some kind of pressure, would you say, at the meatpacking industry, as perhaps there's some immigration things that take place with the new administration?
And that is very much a threat, but we'll just have to wait and see. But definitely, that is a concern of the trade. Yesterday we saw that sharp pullback in live and feeder cattle futures, and kind of going along with your question there, that I believe was due to a rumor that was going around that there was a plant closing. There were also rumors that feeder imports from Mexico, the border was going to open up to them again January 20th. That was not confirmed, just a source, whatever that may be. But those two together really took a toll on futures yesterday. But, that rumor of the packing plant, not confirmed. Same thing with the feeder imports opening January 20th, although they are expected to open again back up this month. The source there, I'm not sure where that news came from, but we were right back up. We're right back up again today.
Got to do that fact checking, right?
Yes.
So what would you say then are the big factors with the greatest impact here going forward that the cattle producers are like, hey, I need to keep this front and center on my radar screen?
And that is really beef demand. I mean, beef cow herd expansion, it's still uncertain. Cow slaughters down. Replacement heifers, that's still limited there. This year's calf crop looking to be smaller. Tighter supplies in general, just like we've been seeing. Uncertainty there, but beef demand, it has been stellar and has held out longer than a lot of analysts had figured. And so any sort of economic turndown, that is the greatest threat.
Very good. Trey Freeman of Ever.Ag, thank you again for joining us. We always appreciate it when you're able to share your insight with us on the cattle industry. Thank you.
Thanks for having me again, Sarah.
Likewise, we appreciate all of you and our audience for tuning in. A reminder that you can view this interview along with a number of other Feedstuffs 365 exclusive interviews on feedstuffs.com. Until next time, for Feedstuffs 365, I'm Sarah Muirhead.